Hello, everyone. Welcome in joining us at this webinar organized by Invest Hong Kong about how the Innovation and Technology Venture Fund supports fintech companies in Hong Kong. My name is King Leong, Head of Fintech at Invest Hong Kong. So for those of you who are not familiar with what the fintech team at Invest Hong Kong does, basically under the directives from FSDB, the Financial Services and the Treasury Bureau, our team is responsible to not only attract international and mainland fintech companies to Hong Kong to enrich our ecosystem, but at the same time, we are here to support our community so that we are able to foster a more vibrant fintech ecosystem. Now, so today we are just very privileged to have some esteemed speakers from the ITVF to go through some of the things that might be of interest to you. But before I go ahead to introduce our speakers, I just want to give you a quick synopsis about what the ITVF is all about. Now, essentially, it is a 2 billion Hong Kong dollars of fund called ITVF, launched by the Hong Kong government back in 2017. And the purpose is to encourage more private venture capital funds to invest in local innovation and technology startups, and to create a more vibrant I&T ecosystem in Hong Kong. Now, the ITVF, through a special purpose vehicle called the Innovation and Technology Venture Fund Corporation, will co-invest with VC funds selected as co-investment partners in eligible local I&T startups. And my colleague would paste the link to this program in the chat function, so that in case you're interested to get more information, you can at least refer to the websites. And if not, feel free to contact us. We're happy to share with you more relevant information. Now, so just want to quickly introduce our 5 representatives of the co-investment partners of ITVF today. Now, so basically, we have some amazing people. I just want to quickly introduce them in alphabetical order. So the first is Tina Huang, the Executive Director from the Greater Bay Area Homeland Development Fund. And we also have Mr. David Zhang, Managing Director with Isola Private Equity Venture Capital Fund. And then we have Dr. Shu Ming, a partner with Ningfeng Capital Partners Fund. We also have Jeffrey Wu, Director of MindWorks Ventures Fund. And last but not least, we have Yolanda Yang, Investment Director with Radiant Tech Ventures Fund. So just want to thank all of you for joining us. And lastly, I just want to also thank the 5 supporting organizations: Algo Challenge Association, Cyberport, Fintech Association of Hong Kong, Hong Kong Science and Technology Parks, and W Hub. And I just want to thank them because this is so far, I think, one of the best attended events. So we have over 500 people registered to this event. Now, so without further ado, I just want to jump right into it. Now, perhaps just to kick it off, to get a feel about what are the things that might be of interest or help to our ecosystem stakeholders in the fintech space. So the first theme that I would like to talk about is the success factors in getting the investment by the ITVF applicants. Now, so with that, I just want to perhaps extend the question to Yolanda with Radiant Tech. So basically, in Hong Kong, there's actually a lot of funding support for R&D startups, from the pre-seed stage all the way to Series A and so forth. Now, and including actually even universities have some kind of funding scheme too. But then the ITVF is definitely positioned to help the startups in the growth stage. Now, so with that, so can you share with the audience about what are the key factors that the fintech, the company, can really focus to help them to more successfully apply and get the funding approved? So Yolanda, off to you.
Thanks, Kay. So first and foremost, unlike other government funding schemes, as you mentioned just now, as a startup, you cannot directly apply for the ITVF funding by yourself. And then you actually need to go through one of the co-investment partners in order for you to access the funding from the ITVF. Then then you actually probably need to persuade any of us here on the panel to invest our money into your company before we can apply the matching investment from the ITVF together. So although that's, I think each investor may have some like slight differences on what they are looking for the investment. But in general, I think the company need to demonstrate that the management team has the ability to execute on their plan. And also the business need to target a large and addressable market opportunities in order to attract the investments from the co-investment partners. And then, so besides that, I think that because we are talking about fintech companies today, so I think for fintech startups, they also need to have like a higher standards for compliance as well in order to secure the fundings from the ITVF. You know, as a government entity, the last thing they want to see is that you put their name in the newspaper for something bad. So even just as a shareholder, they don't want to see that. So for startups, we understand that in the early days, some of them might not have like a dedicated team for the compliance, and they may not have like a full-fledged internal management schemes like those established big companies. But if you would like to be selected for the ITVF funding, I would actually suggest you to put in more effort in this aspect. So just to making sure that you have all the necessary licenses to operate in your area of business, and also like a higher standard for the regulatory and compliance practices as well. So the last thing is that I would say you need to be prepared for more paperwork and accept the ITVF specific terms as well. So if you are up to the stage to actually apply for the ITVF funding, you are likely has been accepted by the co-investment partners. And then you will get access for the ITVF specific terms. And there will be some paperwork need to be done before and after the investment as well. So, but in return that you will have the government on your cap table and be stamped as a government-backed startup, which I think that will definitely help on the reputation of an early stage startup and also boost your customers' confidence, especially as a fintech company. So I think that will be the three important factors that we have seen so far based on our previous experience working with the ITVF.
Great. Thank you so much for sharing the experience, Yolanda. Now, so perhaps just to keep this going, I'd like to sort of change gear a bit to, in a way, sort of demonstrate the benefits for getting, I think, the supports and also how Hong Kong acts as a platform, launchpad for the Hong Kong fintech companies to really go expand and in the regional markets as well as global market. Now, so for that, I think I would like to invite Dr. Xu from Linfeng Capital to share your experience, because obviously you guys have been so dedicated in investing in the fintech sector. You got some great companies on your portfolio. Some of them have done really well. So with that, I just want to let you share the audience about, so what are the common factors that you observed from the successful fintech companies in your portfolio? So perhaps they can also provide some inspirations for our audience online. So Dr. Xu.
Thank you, King. Probably the best way to illustrate this is for me to share a slide to use that as assistance in our discussion. King, can you see that? Can everyone see that?
Yes. Yes.
Perfect. In a way that what you see on the slide is what we cover in the fintech space. So it is our view that the latest wave of fintech innovation in the past 10 years is really fundamentally the digital transformation of the financial services and the related industries through 5 key new categories of technologies. In 2016, Linfeng is among the first to really coin the so-called ABCD, namely AI, blockchain, cloud, and data technology as a fundamental driver for the digital transformation. And lately, we start seeing some application of IoT making impact in the financial services and related industries. So in many ways, Ling Feng's portfolio is really tilted more towards how these technology through the intermediate layer, such as what we call the infrastructure layer, such as high performance computing, such as credit rating and services, data security, etc., to empower the financial use cases that you see on the top layer. And just to give you some statistics, in our US dollar Fund 1 portfolio, which is a co-investment partner with Fund 1 is a co-investment partner with the ITVF, we have a total of 26 investments, 5 of which are companies with headquarters in Hong Kong, and then among them, ITVF has co-invested in 3. These 3 companies fall into actually various subcategories that you see on the fintech. For example, one is in the regtech subsector. It's a startup founded by Israelis who have come to Hong Kong to start and expand their business. The other one is an insurance technology company. It builds cloud-native insurance core system for global insurers. And finally, the third one is an investment technology company that is trying to transform the sector we are in, the very sector we are in, specifically the marketing and the distribution of private funds. At the same time, they all have something very important in common. And probably that's not well known among the Hong Kong fintech landscape. The first is that clearly Hong Kong, from our portfolio, they really attract global talent. For example, the Leap Expert is really founded by the Israelis and Canadians. Ignatica, the insurance tech company, are founded by a combination of Swiss and Puerto Ricans and Americans. And lastly, the invest-tech companies is founded by English, Chinese, and Americans. And second, more importantly, is that they serve global customers. For all 3 companies, most of their revenues actually do not come from customers in the Greater China region. They start out by expanding with a base in Hong Kong, serving Hong Kong customers, but quickly expanding outwards. And thirdly, is that their cap table are all global. And we can probably go more into that because go into more details. So with that, from our experience, we believe it's actually very important that ITVF, along with the government and our peers, very many of us are here, really should continue to make Hong Kong an important place as the original, founding place for global innovators. Back to you, Kim.
Yeah, thanks so much, Dr. Xu. I think this is very encouraging. To be honest, to the audience, some of the information I only heard it the first time today from Dr. Xu. So this is fabulous. Now, I think another angle, since Dr. Xu talked about the global expansion, the global cap table, that's very exciting. But I'd like to also sort of drill down a little bit, because I think in recent years, quite a lot of not only investors, but also fintechs have really looked into the expansion of Southeast Asia as one of their major emphasis. Also with that, I understand that MindWorks have spent lots of time to cultivate that network and also have been very successful. So with that, I would like to go to Jeffrey, about the MindWorks experience in helping the companies in your portfolio to expand in Southeast Asia. So how do you guys do it? So can you share with the audience? Jeffrey, off to you.
Sure, definitely. I mean, but before I get into that, I would like to kind of take a step back and provide a general context of, why and how VCs work with founders. Because I think this topic is what distinguishes venture investing from traditional forms of financial investing, which is like the interactions that VCs have with founders, especially after we invest. So once a VC has invested in a company, they have skin in the game. They will have every incentive to help the company grow in order to maximize their own investment value. However, what kind of value we provide to startups really depends maybe on the stage. For example, earlier stage investors mainly focused on angel seed stage might be more involved with fortifying the founding team or devising strategies to find product market fit. Or on the other end of the spectrum, there are like late stage pre-IPO guys. These investors usually undertake execution and management risk and may be more focused on operational improvements and revenue growth in hopes of a liquidity event in 2 to 4 years' time. Because the company is already quite mature, these investors might spend more time with the CFO rather than the CEO or founder. But VC investors like us are maybe somewhere in between. Given that it is maybe slightly earlier stage, I think it is safe to say that we underwrite a significant market and product risk, in addition to execution and management risk. So it is only natural for us to do what we can to mitigate potential challenges while accelerating each company's growth. And also under this context, each VC has its different playbook. For example, as a startup as well, and if you want to partner with a Hong Kong GP or whatever GP, I think if you have the ability to choose, it is important to learn which VC's capabilities would be the most suitable for you. And I think on behalf of all of us, we've co-invested ITVF into more than a dozen companies, and it has certainly helped a lot of their growth stories from Hong Kong. So for example, Dr. Shu's Lingfeng Capital, as he mentioned, is a very well-known fintech investor who has helped dozens of startups grow to become category leaders. And I'm sure this is a byproduct of their decades of experience within the domain expertise that in the fintech field. And I'm sure their value add has been honed over the years as well. The same can be said for Tina in the Greater Bay Area, as well as Yolanda and David. So I mean, again, back to your question, and apologies for digressing. So how do we help our companies, expand into Southeast Asia? Well, for MindWorks, we invest across both Greater China and Southeast Asia with a Pan-Asia approach. And most of the companies we invest in are already generating revenue and with ambitious plans to scale. Of course, being in Hong Kong has certain advantages when it comes to scaling to Southeast Asia, especially when 30% of humanity lives within a 3-hour flight away. So how do we help our founders? I think I can generally classify into 3 key components. Number 1, help with regional expansion. Number 2, tapping into capital markets. And number 3, also, adding onto Dr. Shu's point, is helping with key hires. So I'll go into each topic briefly, and I'll provide a couple, high-level examples. So number 1, help with regional expansion. This would entail leveraging our relationships in the region to help businesses scale, form partnerships, and hopefully become regional champions. We do this in a variety of ways. First of all, in MindWorks, we're blessed to have supportive LPs who actually are some of the most powerful families in Southeast Asia, as well as a venture partner network that consists of thought leaders in their respective fields. So whether it's in Thailand or Indonesia or any other country, we will always look to proactively explore these synergies between our portfolio companies and these partners. For example, we invested in a company called K-Share in 2018, which originally started off as a payment solution provider for merchants to accept WeChat Pay, Alipay, maybe from Chinese travelers in Thailand. Over the years, the company has evolved into a full stack merchant solutions provider, which combines the features of Shopify and Square, or today it's called Block. In their quest to scale regionally, one of the key pain points was obtaining the relevant licenses. To expedite this, we introduced them to key contact people in each jurisdiction, whether it's in the finance ministry in Vietnam or the OJK in Indonesia. This enabled them to quickly obtain licenses in several markets within only 9 months after application. Today, they're operational in 9 countries across the world, and a lot of the growth is coming from Southeast Asia. More importantly, I think we understand the sales cycle for enterprise or fintech products is notoriously long. So I think as a VC, we will try to do everything in our power to try to shorten the cycle. And the most efficient way to do this is to connect them with key decision makers. That's why for K-Share, we introduced them directly to the owners of large mall operators, which have all become paying clients. It's awesome to see them now powering more than 80,000 merchants across the region, even including the big guys like King Power. The same approach has enabled some of our other enterprise-facing companies to onboard blue chip clients, including the Hong Kong Stock Exchange, property developers, and even casinos. Additionally, we also try to foster synergies within our existing portfolio. So, for example, during COVID, K-Share helped its clients in the F&B sector, like Heidi Lau, deliver their meals. This was only made possible through a partnership with one of our other portfolio companies, Lalamove. Say within another vertical, let's say in the Web3 space, for example, we have another company called Zimex, which is a regulated exchange in Southeast Asia. We're always on the lookout for good projects to list on their platform. So we're always referring them to pre-vetted high quality teams for them to meet. Of course, what we provide our portfolio companies will vary on a case by case basis, but we will always try to maintain close contact with each founder to proactively figure out what they need. So point number 2, I think, is tapping into international capital markets. Is incredibly vital for early stage high growth companies to obtain follow-on funding to extend their runway and achieve their goals. So as such, VCs will also become deal makers after they invest, referring their own companies to investors that might be interested to provide follow-on funding. Of course, not every investor will be keen, but I think we have grown our Rolodex over the years to learn which VCs, whether it's a traditional VC, family office, or corporate strategics, and what they actually like to look at in terms of stage, sector focus, ticket size, etc. In Southeast Asia, for example, if you're a seed stage company looking for funding, there's Wavemaker. For Series A, there's Mux Hill, Open Space, Sequoia Jungle. Series B and beyond, there's B Capital Group, DST, Provident, and the list goes on. Obviously, we've co-invested in several deals with these guys, so we do share notes and deal flow, and VCs will always use this channel to use these relationships to help their portfolio companies. And lastly, help with key hires. Trying to onboard high quality global talent is incredibly difficult in a competitive world. So we try to allow our companies to gain access to this talent pool across any role and across every stage of growth. And how can a company attract great talent? Well, the most compelling pitches are the ones who can create a vision, distill that vision, and tell it in a way to cause people to do almost irrational things. After all, why would I quit my job at a Google, at a bank, wherever I'm very comfortable to go join somebody who's starting over from the very beginning? So as a VC, I think it's important for us, we provide validation of the business with capital. Then we try to look to identify high quality talents within our network and try to make it easier for them to make that jump and create a real impact wherever they go. This was the case when we introduced the former head of Thailand for Lalamove, which he eventually became the head of Southeast Asia, or the country manager of Glints, which is a talent platform Southeast Asia. So I hope that answers your question. To sum up, we help our companies in three ways: regional expansion through proactive business development, access to international capital markets for follow-on funding, and helping them onboard high quality talent.
Well, thank you so much, Jeffrey. I think that's basically check all the boxes. So you guys cover it all. So thank you so much. Now, after talking about these Southeast Asian markets, which is a very important region, at the same time, in recent years, we also observed quite a lot of enthusiasm and business initiatives trying to get into the Greater Bay Area. Now, but at the same time, I think for people we talk to, they say, well, okay, I think we saw for example, the Wealth Management Connects, which is a great initiative for the banks, but those are for the large corporates. So where are the opportunities for the fintech companies? Typically either B2B and B2C. And so with that, I think we have the perfect person to share some relevant experience with us, and that is Tina with GBA Homeland Development Fund. Obviously, you guys are in the GBA. So can you share a little bit about the kind of companies that you invested in that have done well in the GBA? So Tina, off to you.
Yeah, sure. Thanks, King and the team for organizing this event and giving us the opportunity to share our thoughts and also learn from the other investors who are active in this field. So before we dive kind of into the characteristics and what we have seen be successful, let me just very quickly speak to the uniqueness of the opportunity that we see in GBA. So first, I think GBA is a very large idea, right? So how do we really break it down, especially as it relates to fintech? And specifically, I think the opportunities here are around cross-border and integration. And specifically, we have seen wealth management and trade finance benefit mostly from this. And other parts of GBA, I think 2 points worth mentioning. So one is policy support. So as King mentioned, there are lots of initiatives coming out right now. So such as the one with the HKMA and PBOC, they actually just came out with a public notice that's saying that they will start accepting applications last month. And so we expect to see much more of these specific policies being implemented in the short to midterm. And third, I'd like to mention capital support. So funds like ours are very much committed to supporting innovation and entrepreneurs in the region. And so I think overall, from a timing perspective, there are lots of moving pieces now in place for innovation and fintech, especially in the Greater Bay Area. So now I'll kind of jump into answering the key question, which is the characteristics of what makes a successful company here. So I'll speak to this from 3 different angles: monetization, regulation, and resourcing. So I suspect much of this will resonate with what the other speakers have mentioned already, but I'll try to highlight what may be special about GB in particular. And keep in mind, because our investment mandate is more on the 2B side. So this is kind of the perspective that I'll be adopting. So monetization, I think is very important to highlight that GBA is highly competitive and the pace of the market is extremely quick. On top of this, you have a very large pool of business and local talent. And so there are 3 characteristics in monetization that I've extrapolated from the experience of our portfolio companies. So first, be good at one thing first. So the idea here is to have a killer product in one specific niche, and then use that as a strategic wedge to expand your product suite. And so essentially do one product and then replicate that across a different subset of client groups, or get one anchor client and use that anchor client and expand your product suite. And so over time, what that hopefully will do for you is to have a very modular product suite. And so when you then have to balance between the need of larger clients, which requires a lot of tailoring, and the ability and the need of the business to scale, is a much easier process for you. So actually be good at one thing first and then expand is something that we saw in the last generation of fintech companies that's become very successful. In the likes of Ant Financial, for example, you have the original company starting e-commerce first and then gradually expand into finance. And in some of our portfolio company, like Xunce, they started out in equities, especially in asset management, and then was very, very good with one particular client group, and then expanded with the same product to multiple sets of client groups. So be good at one thing first, go vertical, and then go horizontal. So second, I think it's very important to target a large enough addressable market. So think very carefully about the total addressable market of the service and product that you're offering. It's okay to start small, but quickly expand later. So from experience, and speaking from other investors who have mandate in Greater China, you should try to aim for a TAM that's above 3 to 4 billion USD. So third is localize well. And here, because GBA especially, there's a lot of cross-border interaction. You have to interact with both onshore and offshore clients, including talent that's both onshore and offshore. You have to address different cultures and needs. And so you have to, in this process, be very aware of the different experiences and clients that you will be dealing with. And here, what may be easier that we found in past experience, especially in fintech companies, is to get an anchor client. And this might be a little bit controversial because an anchor client can help you with winning client trust in the beginning, but then over time, you do have to kind of wean yourself from the control of this company and make sure that to not become just a technology service provider for this particular client. And then under this as well, you have to make sure that you do continuously engage in very active dialogue with your clients, and then drop basically all assumptions that you might have had going into any conversation. And so the second part of what I'd like to share is about regulation. And similar to the rest of Greater China, regulation is a very big component in GBA, especially for fintech. And here our advice, or what we've seen be successful, are companies who embrace regulation. And this kind of echoes the point that Yolanda was making in the beginning. Everybody knows that fintech has been very heavily regulated, especially in China since 2017, 2018, up until now. Our view is that the regulatory landscape is pretty clear. So companies which focus on the technology portion of fintech will probably find it easier to get clearance. But here, the important thing is to be very mindful as to data security and privacy protocols. And so companies which have then a more finance component should probably more actively seek relative license, obtain regulatory guidance. And this is what Jeff mentioned as well in how they could help companies specifically in his sharing earlier. And so overall, I think now most of the heavy lifting in terms of fintech regulation is behind us for China. So now founders should find themselves with much more visibility as to where the potential red tapes are. And so that the last part of what I like to stress is the resourcing. And so now, because there's so much policy that is supportive of this particular region, there's a lot more resources at your disposal. So there are two types of resources that I would strongly recommend all companies trying to kind of monetize in this region make use of. So one is definitely cross-border talent. And because GBA is cross-border focused, you should find people both onshore and offshore. And when you assemble your initial team, it's very important for you to think in terms of complementary skill sets. So from an investor perspective, a team that combines expertise in both business and technology, and combining both offshore and onshore is ideal. So think about what expertise specifically also matches the problems that you need to solve based on your business model. The other reason why team is very important is that when you have a very good blend, you're probably able to understand your clients better as well. And then the second part of resourcing is leveraging supportive policy and incubators. And ITVF is obviously a great example. FintechHK is a great example. So basically, as a founder, you should really find all GBA related incubators that you can, get any kind of contact for, and be very resilient in terms of reaching out to them and trying to kind of get your name elevated. And this is a very great way to create awareness of your company, because investors like us would oftentimes work very closely with these kind of ecosystem partners to find early stage companies and reach out to entrepreneurs. And so lastly, just a little bit of advice. I think it's very important in this process to be resilient and expect difficulties. Just, it's going to be hard, so keep trying. And here, specifically when it comes to investors, I think there are two ways that might make it easy for you. So one, use public information and find investors who have invested in the industry or the specific product niche that you're trying to go after. And then secondly, find investors who have a similar technology or industry background as you, who may be able to develop rapport with you easier in the earlier stages. So I'll stop here.
Wow. Well, thanks so much, Adina. In fact, I've been taking notes very diligently from all the investors so far. So thank you so much for sharing the insights. Now, I guess just now we talk about a number of investee where the companies are focusing in the B2B space, offering solutions to financial institutions, be it the banks, the insurance companies, and so on. And also, I think a few investors also mentioned the tough truth, in which I think the selling cycle is not short; it takes some time. Now, so I guess the next topic I really want to tap into expertise from David from Isola Private Equity, is that because David has been in the investment banking, investment world for a long time in the financial sector. So perhaps the very relevant topic where David can shed some lights with the audience is, so when the fintechs, particularly B2B, approach the financial institutions in selling the solutions, what are the things they should watch out for in order to increase their odds, for getting a contract? So David, after you.
Okay. First of all, King, thank you. And also thank you for Investment Hong Kong for today's opportunity for sharing our perspective on different topics of interest to the audience. King, that's a very good question. And why is it important? Over the last 4 or 5 years, between corporate users, legacy financial institutions, and corporate ventures of those financial institutions, they are probably one of the biggest founders of fintech, different fintech opportunities globally. I think over the last 4 years, they deployed over $40 billion US into different fintech opportunities globally. I'll share my perspective on what potentially they're looking for. And I would like to divide my experience into 3 different areas. There's a fine difference between the type of business models that they are looking for. There's also different avenue of funding they can deploy into different fintech opportunities. And lastly, I think very importantly, you're also looking at different types of audience, depending on whether you are pitching to a legacy financial institution or you're pitching to the corporate venture arm of these financial institutions. First of all, into the business model, there's a very different fundamental approach in how a corporate user, such as a commercial bank, insurance company, and corporate venture is applying when they are evaluating different fintech opportunities. For traditional financial institution, their focus will be how to optimize their user experience, how to improve cost efficiencies, versus where from corporate venture standpoint, they're probably looking more for innovator and disruptors to the industry. That is going to drive the institutional strategy. They're investing, partnering, JVing, and acquiring different fintech opportunities. I'll give you some examples. I think a good example is Marcus by Goldman. That is coming from a legacy investment bank / corporate bank. I think most corporate banks and investment banks or insurance companies, they tend to be a bit more conservative in their approach. So they'll probably favor more accelerator, incubator approach versus partnerships or acquisitions. On the other side of the equation, increasingly over the last 2-3 years, we're also seeing fintech companies being investor acquire of other fintech opportunities. A few examples: Nubank in Brazil, arguably the largest fintech company in the world, which is also a neobank, and they expand, acquire new capabilities, new product categories through acquisition. Another good example is SoFi. I think SoFi, being a relative new neobank, given that they secured their bank charter a couple of months ago, they're also growing their capability through acquiring other fintech companies such as Galileo, Kinesis. So there's a fundamental difference in approach and business types, product types, different corporate users and corporate ventures are looking for. And moving on to avenue of funding, I think I highlighted earlier, traditional financial institutions, they probably favor more an incubator, accelerator approach versus at the other extreme, corporate ventures, where they are seeking to form corporate partnership and also seeking to grow, expand through acquisitions. And lastly, which is also, in my view, the most important and relevant point when you are marketing, presenting to a financial institution, whether it's a corporate user or in their corporate venture arm. Traditionally, when you are presenting, discussing such investment opportunity with a corporate user, the typical audience will be your COO, CFO, CIO, even in many cases, CEO. The institutional mindset of this audience is driven by how you can be a problem solver to the issues, in many cases, legacy issues facing the financial institution, where on the other hand, when you are pitching to the corporate venture arm of quite often the same universe of financial institutions, they're looking for innovator and disruptors. And in summary, I think for corporate users, they're probably looking for more B2B solutions where you can help with their customer experience, improve their cost efficiencies, where for corporate ventures, they're looking for potential return, and also how in a B2B, in many cases, you can help them to expand the product universe and also introducing new product categories such as robot advisory for the institution. So in short, King, that's my experience and perspective on how different a corporate user and a corporate venture arm quite often for the same institution will be approaching, assessing, evaluating different fintech opportunities.
Great. Wow, this is very valuable insights. And I hope that the founders and the teams from fintech companies will really take this to heart. For us in West Hong Kong, we also spend quite a lot of time to talk to the corporate, mostly financial institutions, particularly the innovation team and the corporate ventures teams and so forth. And the people that David mentioned. Very true, because the motivation for the different the banks and so on, they are quite different. I mean, a lot of times, I guess we shouldn't make assumptions that, they're looking at us as an investment. But in most cases, they much rather invest in you to get your capability or even your insights by being on your board so that they can understand your roadmap, so as a way for them to also do the internal planning in case of seeing some upcoming disruptions in the market. So I guess for that, I think I guess we can leave some time for Q&A in case there's any question in this. I think this is a very important topic for the B2B fintech companies. Now, so I guess I just want to have a shout out to all the audience that I'm going to ask the speakers to share perhaps like one last thought based on their various expertise But then in the meantime, please think about any questions that you have, and feel free to just raise it in the chat function, and I'll try to leave some time for some Q&A from the audience. So again, this session is really about you. It's not like a one-way presentation. We're just trying to give you some information to stimulate more thinking of things that perhaps have been bothering you that you cannot figure out. So now we really have the luxury to have all these experts here to hopefully answer your questions. So think about a question and post it in the chat box. Now, so with that, I just want to change gear and go back to our speakers. So perhaps starting from Yolanda again. Now, obviously, I think there's just so many things that you guys do, but if you want to sort of single in one thing that you want to advise the applicants or the companies looking for funding, or in general in running the business, what would that be? So Yolanda?
I would say if you can secure the fundings from any of the co-investment partners here, then you are almost there to secure the fundings from the ITVF. So the key here is still to improve the attractiveness of your business as an investment target to the investors, so that you can actually increase your chances of securing the fundings from both of the co-investment partners as well as the ITVF.
Great. I think that kind of endorsement definitely would be super helpful. And so perhaps I would go to Dr. Xu. So any advice?
Sure. Probably a couple. First, be a good company first, right? It's always much more important to get to Tina's point of monetization, get revenue from customers than to get funding from VC. And along that way, given that we are in the context of ITVF, definitely have a clear idea of what your Hong Kong story is. Whether you define yourself, in the context of a thesis that is synergistic to Hong Kong, whether you want to say that I really want to make Hong Kong a great global financial center, or to make Hong Kong a very integral part of the Greater Bay Area. You definitely have a Hong Kong story for that. And along the way, there should be a lot of details. For example, in the most recent cases, whether you actually have sufficient size Hong Kong-based team, and then details down to whether you have a Hong Kong account, given that now setting up the account in Hong Kong is getting more and more difficult. So, those are some of the from the top level to nitty-gritties. Back to you, Kim.
Great. Thank you, Dr. Xu. So maybe Jeffrey, can you share a few thoughts?
Sure. Yeah, I mean, I totally agree with Dr. Xu just now. I mean, in order to gain any investment from a VC, you have to be a very good company. You have to learn how to present it in a very conducive way to attract their interest as well. But in the context of ITVF, I think you have to be ready to provide accurate and timely information to the GP in order for them to relay. Obviously, ITVF is a government institution and it's taxpayer money, so they have a increased scrutiny over every deal that they review. So as a startup, you don't have to have a super robust information system, or but you have to be provide accurate and timely information, whether it's corporate documents, legals, or all the or more minute details in terms of your Hong Kong nexus, the operations staff, etc. So yeah, that would be my advice for these startups.
Great. So Tina?
Yeah, I definitely very much agree with what everyone has mentioned so far. I would just add one point, which is embrace regulation. So sometimes when you are operating in an environment where what you're doing is very new, sometimes there may not be a regulatory body for specifically like what you're trying to do. But the thing here, and I think it's very important to demonstrate to the investors that you're talking about, is the readiness and attitude to be, to talk to regulators and to embrace regulation when it does come. And so I think the attitude is very important if you don't have the opportunity to actually be regulated. Yeah.
Great. And last but not least, David, any final thoughts?
Thank you, Kim. I think everybody has shared very good perspective, insight into this topic. And from investment standpoint, having the right shareholders is critically important. In particular, I think also relevant to today's panel is having institutional shareholder and ITVF is very, very beneficial when eventually at some point the startup, the fintech company will be dealing with institutional counterparty. Having the right shareholder, institutional shareholder, in particular ITVF, on the cap table is a benefit by association, because that will have implied they have gone through the rigor of governmental due diligence and also the demands, requests from the other institutional shareholders. So having the right shareholder at the very beginning of the journey of a startup is critically important, how the future journey will be shaped and how they will develop over the years.
Great. Thank you, David, and all the other speakers. Now, with a bit of time, I guess I'll go into the Q&A. We have a very enthusiastic list of questions. I guess I would just go to the address the questions where that can potentially benefit more audience, so that I guess more people would probably, I think, in the same thing. So I'd like to go after those questions first. Now, the question is, this is from Richard Leung to the speaker investors. So what would be your advice to the startup that's considering whether to focus in a big market like China or going to the Southeast Asian markets where the regulations are different, but arguably with a lower and less intense competition? So any advice about how to make that choice? Bigger market, the smaller, arguably less competitive markets.
Well, maybe I can.
I guess.
Go ahead.
Oh,
Tina.
sorry. You. I guess I can speak from China's perspective. I think the reality is that you have to be realistic in terms of what kind of partners you can find. So I'm guessing maybe Jeff will add on to this later, but I think for both Southeast Asia and China, you have to have someone in a team that you can trust who can help you operate on the ground. So think about whether you are able to find and assemble a team like that. And I think it will largely depend on where you can potentially really implement and build a product and expand. So I think it largely depends on your team.
Yeah, well, because Southeast Asia could be large in certain specific segments. So I think the first thing entrepreneur wants to have a clear story is whichever market you target, it needs to be the segment that should be large enough that you can tell a long-term growth story. Especially, if for early stage companies, you want to give a story to say that, let's say that you are valuing at $20 million US. You need to give the early stage investor at least a story, a path that can make 50 to 100x based on the current valuation, because with dilution, actual return will be significantly less, and then you can actually have risk adjusted on a whole bunch of other dimensions. And second is, again, subject to the capability or the previous experience of the founding team. You need to address a market where you can get a quick win, regardless of how small that is. So that very much depends on whether you have existing relationship on certain corporate customers or other factors. So that in the due diligence process that will usually last 3 to 4 months, the investors are constantly checking whether the story you told in week 1 can actually be verified on week 7 or week 8. And that's something that should definitely be constant in the mind of the entrepreneurs.
Great. Any other thoughts? If not, I'll go to another question. Okay. Now, I think there are a few questions that are around the same topic, and that is the stage that the ITVF will invest in. So can any investor comment on whether or not anyone from the angel round, seed stage, early stage can apply to the ITVF?
Maybe I can share a little bit here. So I think that there is no hard requirement saying that you cannot apply if you are a seed stage or a pre-A stage company. So it's down to the preference of each individual co-investment partners and their requirement and preference on the type of the deals they would like to make. So for example, some of the investors would prefer the companies to have the product validated by the market and have some meaningful early revenues before they can make their first investment. So in that case, a early stage company with pre-revenue status might not be suitable for that particular co-investment partners. But it doesn't mean that it may not fit the appetite for all of them. So I think that depends on the stage of the type of the companies you are. So you can try different co-investment partners, understand their investment preference, and find the best fit between yourself and the co-investment partners, so that you can increase your possibility of securing the fundings.
Any other comments from other investors?
Yeah, maybe just one more observation and my experience discussing this type of issues with ITVF. I think they're pretty open-minded. They don't have a fixated view on at which stage you can go to them for funding. I think the whole objective of the exercise is to encourage, incubate, accelerate local fintech development. So don't be discouraged whether you have an idea. Clearly, it has to have a proof of concept or something that potentially commercially viable. I think they are pretty open between C to A and B round of investments, but they're pretty flexible in terms of accommodating at different stage of the development of the startup into the funding, providing relevant funding support.
Great. Okay, perhaps I'll just speed up it with another question, which is a very pragmatic one. Now, obviously, now with the the COVID still going on, I think the face-to-face meetings are not as easy. So the question is, when someone in the fintech space would like to apply to ITVF, with the fact that face-to-face meetings may not be as easy at this moment, be any impediment in applying for ITVF, or this can still be done via like Zoom and so forth? I think it's a great, very practical question. Anyone would like to take this?
Yeah, I mean, I think Zoom has become the new norm. I think as bad as it sounds, the good thing about Zoom is you can't be late for meetings, and I think as VCs we can more control of our schedules, and when we schedule a lot of Zoom calls a day. Although it's kind of, you cannot connect as well directly to founders as in person. It kind of loses the human touch, but I mean, in terms of building rapport over Zoom, and if you're able to liaise with the team over Zoom, I think it hasn't stopped us from collaborating with ITVF and investing in startups in Hong Kong. So as maybe as hopeless as it seems right now, it's still going on, and we're still supporting the ecosystem. Yeah.
Yeah, let me just add a couple of points. I think among all sectors, fintech is probably better positioned in the more virtual world, because most of the assets or value are relying on the people, on the program, on essentially certain things that are more digital. Just imagine if you are a company that's mining, or a company that has a lot of inventories, right? Then in the less traveled world, for any of those companies, definitely on-site visit will be required, and relative to that, fintech is more advantaged. And so that's in a way, congratulations to the entrepreneurs here.
Perhaps just adding to what Shuman has commented earlier, in a funny way, COVID travel restrictions have actually improved fintech investment discussions in Hong Kong, because many of the entrepreneurial founders of fintech companies are either in Hong Kong or in Greater Bay. So the fact that we can't travel has kind of forced us to discuss, share, exchange ideas a lot more. So COVID, from at least from investing in Hong Kong, Greater Bay, Greater China fintech opportunity standpoint, hasn't really impacted on the deal origination process that much.
Great. So let me address another question that is also a very practical one. So I think just now we talked quite a lot around like startups, but obviously I think fintechs, I mean, the term fintech is new, but financial technology has been around for like 40, 50 years easily. So the question is, I think for the for companies that have been doing fintech for some time, are they still eligible to apply for the ITVF, given they are not like a new startup? Any comments?
Yeah, King, I think you highlighted a very good concept. Fintech is not a new investment category per se. I think if we go back to financial history, we talk about credit card innovation in the 50s, right? Internet banking in the 2000s. And more recently, you have countless payment tech processing. So we're probably right now up to FinTech 4.0 right now. So I think over the years, there's evolution of what FinTech, who are the innovator disruptors in FinTech. But from investment standpoint, it doesn't really matter to us whether we're looking at a FinTech in the traditional sense, such as an evolution of the traditional legacy financial institutions business model, or being a disruptor or being an innovator, such as Nubank from Brazil with an entirely new business model. So I think from investment standpoint, we are flexible enough to accommodate FinTech in terms of different types of business model, whether it's traditional or whether it's a disruptor innovator.
Great. Now I'm also conscious of time. Perhaps we will take one last question and then I'll just do a quick wrap up. Just want to be respectful for everyone's schedule. Now I think the question that I see here is that is about the ticket size of investment made through the ITVF. So can the investors sort of share a little bit about what kind of ticket size are we talking about?
Sure. I think in terms of the ticket size, ITVF, it's really contingent on the GP's ticket size because it's a 2-to-1 matching scheme. But I say for MindWorks, for example, our ticket size varies from 1 mil to 8 mil US, but we focus on Series A to C. So obviously, if we invest 2 mil ITVF, if they approve, it'll be 1 mil. So it largely depends on the GPs and their ticket size and their stage focus.
Right.
Yeah, maybe we can also add a little bit here. Then, so it depends on whether we will be the lead investor or the follow investor. So, if we are going to lead a deal, then the ticket size might be a bit larger. And then, if we are just the follow investors, maybe it's smaller. So, typical for reading that we will invest around 1 million for the first check. And then we will make subsequent investments in the subsequent rounds as well.
Yeah, I think to a certain extent, it's also a function of the business model of the fintech company, because there's a huge difference in terms of capital they would need to grow the business for a business such as InsurTech with a regulatory capital requirement, which could be fairly sizable, significant in terms of fundraise and how much capital that they're looking for, versus an innovator disruptor where it's capital light. So it's also a function of what type of fintech that you're looking at.
Great. So thank you so much. Again, I'm conscious of time. I think the final message I just want to share with all the audience on Zoom is that I just pasted a link in the chat function that leads you to the global fast track program that Invest Hong Kong ran. So this is our program, the campaign page from last year. We are updating the program details for this year that we will launch soon. But by going to this website, at least you can get a feel about what kind of help that we offer to the fintech companies in Hong Kong. So essentially, over the past 2 years, again, under the support from FSDB, the Policy Bureau, we're able to get the funding as well as I think the great support where we're able to reach out to, right now, over 70 corporate champions. So these are the banks, the insurance companies, and the purpose for that is to help the fintech companies to open door more easily, much like what the investors just now will share with you about connecting with the right decision makers. Now, at the same time, we also have reached out to by now roughly 30 investors in our sort of investor champions network. So the purpose is also to introduce you to the right investor. Now, so that would be another sort of call to action to you in case you would like to get more support on top of considering in applying to the ITVF. Now, so with that, I think our time is up. So thank you for patience and time. But last but not least, I really want to sincerely thank our investors today. So we have Yolanda, Tina, David, Jeffrey, and Dr. Xu for spending the time with us amid your busy schedule. So I hope that information is helpful. So in case there are any other suggestions from the audience about the kind of topics that can be useful to you, feel free to let us know, and definitely we try to arrange it so that we can help all of you to thrive and succeed in the business. So thank you so much, and I wish you have a good day. Thank you. Take care.